Hello there, welcome back to this back testing video. Now, today's video we're going to be looking at UJ. So this is chart of UJ, so USD Japanese yen, and we are currently on the weekly time frame. Now, the weekly time frame we are definitely on the bullish movement. So you can actually see because of the creation of high highs and high lows, high highs and high lows as well. So you can actually see. Okay. Now, what has happened here? We had a big down move on downside. The price has reacted to bullish in this case. Now, price came to this point here, this order block, and then price started reversing. So this is where the sellers are more aggressive. Now, if you were to use overfib from this high to this low, we can actually see that we came around this area of 78% there. Okay. Now, price has reacted, and you can actually see pretty much the week 1, 2, 3, 4. And then this one was doji, hammer candle, and then this one here. Pretty much you can actually see all those many weeks of bearishness, and we came into this order block on the upside. Okay, which is where we currently are. Okay, now on the high time frame, which is the weekly time frame, now you can actually see that in this point there's no liquidity. Yes, we have those lows, those lows, those lows. So we've got this one here. Okay, so this could be a major point of liquidity, so which price can pretty much pull back and then take out in the future, and we have this fair value gap as well. Okay, but let's see what price is currently doing. Now go on the daily time frame to see what we have. Okay, now again, the reason why I marked this area because we do have an order block and we have the mitigated week of this weekly order block. So let's take a look what we have. You can actually see at this point we formed doji, the price reversed from there, and then that's where price currently is. We'll go on the lower time frame, or 4-hour time frame, to take a look what we have. Okay, now this, what do we see? So price came here, pull back, came here to test, to go up and then break. So this is the last supply before the break. Now the original point was this one here. Okay, just take a look. Good. There we go. Weekly time frame. Now we'll go on the 2-hour time frame to take a look what we have properly. I'm going to use my indicator of the day session to help myself out. Okay, so we've got all the way from here all the way down here. Okay, so and we have Friday there. So this is the highs of this week. This is the low of this week there. Okay, let's keep on going. Now what I will do is so 8 o'clock, and this is the Sunday. Right, here we go. So now what we have. Okay, now we have 61%, which is around this fair value gap, as you can see, and we've got 51%, 50%, which is around this point. So 50%, we have this pretty much this order block there. Let me go in the lower time frame to take a look what we have properly. Okay. Okay. Now, so what we have, we have this point here. Also this point here. So this is the 50% of the week. 50% last week. Okay, so this is 50% of this week here. Okay, nicely done. Okay, and then we have an order block just above this. So in here, so we've got the buy to sell. So this is on my bearish order block. Okay, now this is the extreme point, as you can actually see. Okay, so now what we're going to do is I'll mark this out. I'm going to remove this. I'm going to mark out what do we have. So if price came here, give me some reaction, then I can go for a short to target this low here. Okay, now let's keep going. Okay, so market open up. So this is Monday now. Again, so I'll place this there. Monday. We're getting rejected there. Let's play on. So okay, so we broke this. Now we are getting a reaction at this particular point, which we can see. Now we're going to go on the lower time frame. Okay, we had a move, and then I'm going to go on the much lower time frame there. Okay, let's take a look what we have. Okay, so here we broke this already. Oops, broke this already. We'll go from here to here. Okay, I can see that this was an order block. We tap into this already, and then we're moving on. So I can happily enter here, enter short here. My stop will be above this high, and my target will be these lows there. Now let's take. I'm currently on the 1 hour time frame. In terms of liquidity point, I have this there. This will give me a 1:3. I also have this point of liquidity. This will give me 1:6. Now, to help me out, I'm gonna open my session to know where we are. So this is my session liquidity at this bottom here. So 1:6. Okay. So let's take a look what we got. End the trade. Currently playing on. So we are getting a move on the upside now. You can actually see. We took this out. We're going to take this one out. And no, London session open. Went all the way down. All the way down. And here we go. We're close to hit TP. Came here. We're gonna take this out. We're gonna take London high maybe. Okay, so you can see we went up to take out London highs. London highs. And so we are currently in sticker. We're currently in. Let me use my fib from Monday low to Monday highs to know where we are. Okay, so price came here. No problem at all. Okay, so price came here. Now let me go in the lower higher time frame. Okay, let me take a look what we got here. Okay, so we have this could be our my inducement. There we are. Okay, we're going to keep on going higher. What I have here. What block? Okay. Right, so now we have a break. Okay, so we are moving on the upside, therefore I can enter short here. Stop loss will be above this. Okay, we're getting some aggressive move, and my TP will still be the same. Yeah, let's take a look. Okay, we can back up to retest this and draw down currently. Okay, here we go. Right. Okay, there we go. Alright, so this trades won finally. Okay, 6 and 3, so 8, 9 risk to rewards. So I can go in the higher time frame. Take a look now. Look at that bearishness. We're going to we're going to take this low. Right, okay, so we took out this low. Right, so you can actually see this is the supply zone that took out this low. Okay. Alright, so now I could have hold it for 1:10, but you know what? It was 6 something. Yeah. Right, but this is 9 too much. Okay, that's fine. So took out this low now. Now where else do we have zone of interest? Where else we have zone of interest? So I can see that we have one here. Okay, and then the top one Okay, so these are the points that we have. This point, this point. Okay. Alright, let's take a look on the 5-minute time frame. Okay, so if price come to this zone, I may be looking to short. Tokyo session, here we go. Alright, so reacting off the FVG. Okay. London open. Okay, looks like we're not getting anything. Okay, the New York open. Alright, so New York opened. New York open. Okay, so we came here. New York open. We came here. We look at liquidity above. Alright, so let's take a look from here to here. 50% is around this point. Let's see what we got. Okay, so we are bursting through that. Alright, so now, look at that. Now we are displacing below. Okay, so I can enter here. My stop will be this liquidity point. Which I don't like how aggressive the price reacted to. Okay, so the FVG. Okay, FVG, let's go. One to two. Yeah, I don't like this one. 1:2 would be better. Let's see. Okay, unless give me a nice retest, then I can enter on the retest. Let's have a look. Okay, here we go. Yes. Okay, so I'll remove this. Okay, so because I want the retest. Okay. Okay, so we're going to go higher. Okay, again now the trade there, I've removed it because it's a bit too much. Or I'll just leave it there. I'll just leave it there. Okay, let's say what I entered there much. This one's a loss. Okay, let's say this is a loss. Okay, let's take. Where are we going? Oh. Okay, so now we're reacting. This place below. Okay. Okay, this is a mistrade. Okay, yeah, this is a mistrade. We can see. Okay, that's a mistrade pretty much. Yeah, this is missed out. This is missed out anyway. It's missed out anyway. Okay, now what do we have? Okay, so now what do we have? Trade. We're gonna crush further. Yes. Oh no, we're not crushing further. Okay, interesting. So we broke structure here. Now we broke structure here as well. Okay, so we're getting bullish direction now. Okay, let's go to the lower time frame. Now what's happening? Okay. Now what we have this point, this low to this high. Okay, so 50%. Okay, so tap into the 50%. We are getting a bullish reaction. Nice bullish reaction there. We go on the high time to see how this looks like. Okay, so stop loss will be below this FVG. And my target will be okay. Let's take a look. Got this high here. This is the old. Okay, we'll just give me another entry. There we go. Nice one. 50% entry, favor the gap, and then London session as well give us a nice move. So this is 4, this is 9, that's a good one. Can't look at this going the 4-hour 5-minute time frame. Let's take a look now. Now we're going there. Where are we going to be reacting off? Where are we going to be reacting off? Okay. So we have this point there. Let's take a look. Nope. Strange. Now we have this point. Let's take a look. Okay, so we tap into this zone. Okay, and look how aggressive we have reacted. Look how aggressively that we have reacted. Look at that. So I could have entered for short on the lower time frame if it gave me, or maybe not. Let's take a look what we've got. Okay, yeah. So okay, so this would be nice. That would be a nice entry there. So here, stop loss will be below, above. Target will be to this zone there. This is the zone I'm looking for to target. Okay, so it looks like I got this took me out, and now the move's gonna happen. It's gonna go down now. Look at that, it's gonna go down. Not going down. Okay, now it's going down. Okay, so what we got? Let's take a look. 3-minute time frame. I want to know what is the thing now. If my stop loss were above, then fair enough, I'll still be in the trade. Okay, but again, why did it not work? Let's take a look on. Okay, so we're down. This is the first initial reaction. The price came up, tapped in much deeper, take out this liquidity there. Okay, alright. So this is the order block on top. Okay, so price came up to tap into the order block again. Then we had a reaction again there. Price came up again. Okay, so this one's gone then. That's fine. Okay. Alright, so here is a move. So what we've done so far is we've built up liquidity to be taken out in Tokyo session. Alright, Tokyo session give us nice moves. So Tokyo session, this here was a nice move because we've taken liquidity already. So this would have given us my move that I needed. There we go. Okay. Now, 1 hour time frame. Okay. volume sweep. Okay. Alright, from sweep, took this out. Okay, I've got liquidity there. Okay, fair enough. Came into the zone. Into the zone. Okay, so now we are going up. Oh, so price is getting bullish there. So enter there. Stop loss would be below this move. Okay, then my target would be up. That'll be this 50%. This 50%. Now, why 50% is because we've tapped into this supply zone. This supply is done. This supply is done. This supply is done. This supply is done. All the supply has been pretty much been taken out, and then we have this extreme zone there. All right, let's take a look. Okay, so here we go. Alright, so done. Now, in the duration this week, so let's take a look. So this is Friday, yeah, it's counted Friday. So Monday will be no trade. So Tuesday, 6. Okay, Tuesday again, 3, so that's 9. And then Thursday, Wednesday, lost 1. Okay, so went from, let's say, 9 to 8, so 9 to 8 minus 1, and then we missed trade on Wednesday again, so unfortunately that's missed out. Then the next day, so we've got 4, yeah, 4, 9, okay, so 9 again, so 9, 9 minus 1. 9, 9 minus 1, so 9, 9, 18 minus 1, 17. Okay, and then minus 1 again, so minus 1 again, 16. Alright, so we drop down to 17, then 16 minus 1 again, and then we would manage to get this one. Let's say no, let's say, because this one was, we could have, I'll remove this one. So 7 to, wait, 2, wait, 18 minus 2, 16, 16, and then the last one is 7. So Friday, so 7. So that's 21, okay? So pretty much this is 1 week of 21 trade. So 1 week of 21 trades. So again, so if we're risking 1% for each of these trades, okay, 1% on 1k account, so it's 100k account, and then 21, that'll be 21,000 in this week. And if we're doing a 8, this therefore, okay, so we take 18% to 80%, so we'll be getting 16k this week. So this is a 16k week, okay, if we risk 1% on the trade. Okay. Okay, so yeah, so 21 times 8, yeah, so 16k a week. So this is 16k a week. Now, if we were to double this account, let's say we had 2k account, and then we traded both the accounts simultaneously, then this would be twice 3, 3. Okay, in this case, so it'll be, I think it'll be 21, 22. Let me check. Yeah, 33k, 33k account. So this 33k account in just 1 week, based on this trade alone. And all we're doing is we're trading. So we've traded. So we know the direction is bearish. So we traded bearish, bearish, bearish again, and then what we notice a change of character here. Notice change of character that happens, and then we're willing to take the trade to the next supply zone. So we're not taking all the way. You can actually see we're not going all the way down, okay, and then we're not going all the way up, okay. So we're taking pretty much demand to supply, supply to demand, in the case of liquidity to liquidity. And this one here, so we've taken this out, we're ready to take out the next one. And even if I did this one, that would be fine as well, 6, okay. But there we go, okay. And let's take a look. What if we were doing something else? Let me check. Let me see. What else do we have? Another option as well. Okay, so we would definitely taking this short here because of this supply zone. We have definitely taken this short. Okay, so definitely taking this short there, and then to this low. So this will be 4. Now we can go in the lower time to get the area. I'm just checking. What if we want to make our life easier? Okay, supply zone. Okay, nice one. And then what we notice is we notice a break of structure there. So price came up, came down, and then here we go. Very nice one there. Stop was below that. And then the target will be, the next target will be this unmitigated supply, which could be this one again, still. Yes, 3. There we go. And then the next time we're going to have another one. The fair value gap being created. So we got this point here. We tap into liquidity, and then went up as well here. And this time we're going to go for the high liquidity point, which is this one, which is here. Okay. Alright, so if we take a conservative, then this is a potential trade that we could have entered in the week. Maybe in the lower time frame we could have entered more based on the supply, demand. Okay, so we have 4, 3, 7, 8, 9. So 9 a week. Yeah, so 9 hour a week. Yeah, and you can actually see compared to the other one, this one is much simpler. Okay, so trade, stop, again, trade, check liquidity, sweep liquidity, go trade again. Okay, so this is something we can do.